I'm Dr. Dave Janda. Welcome back to the Insider Insight Show. I am honored to have back with me someone who is a very dear friend, someone who is incredibly courageous, someone who has put you ahead of this financial curve that the globalist cult has constructed, which ends in a brick wall with the shattering of your freedoms and your liberties and your, finances, all by design, by the way. Not an accident, not a coincidence, not because of incompetence, all design. He has put you ahead of that curve and given you an off-ramp through the information he has provided for decades. not just years, decades. He's gotten a lot of heat for it. And as some of my friends who are fighter pilots or former fighter pilots always say, you get the most flack when you're over the target. Well, Bill has been over the target for many, many years. In a nutshell, Bill, I believe, is one of the best, if not the best, financial analyst in the world. And in particular, as it relates to the ultimate store of value, that being precious metals. He is a broker for the Miles Franklin Company. His website, chock full of great information, and the means of which you can get in touch with Bill is Bill Holter, HOLTER.com. Bill has warned us for years that the financial endgame is imminent. Well, it's beyond imminent at this point. It's in play. Now, many people believe that's hyperbole. Let's get Bill's answer to that. It's my honor to welcome back Bill Holter. Bill, welcome back.
Thanks for having me back, Dave.
Okay, Bill. Is the end game in play?
Yeah, I mean, people continually ask the question, when? When is this going to happen? I mean, open your eyes. It's happening right before your eyes. I mean, we're at the point where by the end of this year, the debt service, the interest payment is going to be at $1.5, $1.6 trillion. I mean, that's a third, basically, of the tax revenue this country's taking in. We're, from a legal standpoint, a judiciary standpoint, and a financial standpoint, we are truly a banana republic. You are watching it happen right before your eyes. I mean, all you have to do is, obviously you can't watch mainstream media, but if you do any digging at all, you within the first 10 or 15 minutes, you'll be scratching your head because the math just does not add up.
In fact, I go back, Ernest Hemingway wrote the book in The Sun Also Rises. Quote, how did you go bankrupt? Well, our country's bankrupt. If you look
slowly at first.
Right, exactly. Two ways. Oh, look at you, Hemingway. Look at Bill Holter, Hemingway. Two ways. He said 2 ways, gradually, then suddenly, as you outlined, right. Bill. Bill, I think we're in the sudden movement right now, the sudden part of this, right? And so many people are mesmerized through the bought-off lamestream fake media and the, quote, information, if you want to call it, that they're getting through their brokers, their stock brokers, their paper brokers, as I call them, actually, that they're completely unprepared for what you have absolutely dissected is a debt, D-E-B-T, a debt implosion that brings the system down. Bill, just a couple recent headlines that kind of made it out of the independent media. Powell, the head of the Fed, expects there to be bank failures from commercial real estate. The FDIC says overdue commercial real estate loans are highest since 2014. The FDIC also states that late credit card payments are the highest since 2011. The FDIC adds 8 banks to the problem bank list. Total assets at problem banks rise to over $66 billion. The FDIC says there's a share of unprofitable institutions which have increased by 11%, highest since 2017. And then we have this, Bill. The FDIC head says the U.S. is ready if a big Wall Street bank fails. yet something that came out yesterday, Bill. The fund created to unwind a failing mega bank has a problem, right? There's no money in the fund. Bill, take us through this, where we are with the banking industry and this debt takedown.
Yeah, if we were having this interview even 5, 6, 7 years ago, this would still be Bill Holter's opinion. It's no longer opinion, it's pure math. I mean, you can't take a third of your tax revenues and pay that on interest. I mean, think about that as an individual. It doesn't work. From the banking standpoint, I mean, FDIC has a total of, call it $125 billion. That would be wiped out and then some if just one of the top 10 banks went under. The problem is, because this is a Ponzi scheme, and a Ponzi scheme always needs new money coming in, there has to be collateral in order to create that debt. And the problem is, everything is borrowed against now. There's nothing left. There's no meat left on the bone to use as collateral. And I guess my comment as to why it's here and it's right now, there would not be the combination of the BRICS. They would never have bothered to put that together. They've put that together. They've outlined it. My guess is that in their October meeting is when they basically flip the switch. And for those of you who are interested in gold and silver, they're talking about, and this is on the absolute upper end of what I expected. They're talking about doing 40% backing to that currency with gold. My guess was it was going to be 20-25%. At 40%, there's not enough gold out there to back that currency at the current price. I mean, you could have 5 ounces and there's enough gold, depending upon what the price is. I mean, if each ounce was 2, 3, 5 trillion per ounce, yeah, there's enough gold. What I'm getting at is the BRICS, and especially China, have been accumulating gold now for many years, anticipating where we're headed right now. They are going to revalue gold higher. And that will help the BRICS nations, because think about what happened back in 1933, 34, when they revalued gold here in the U.S. It fought the deflation, and there's deflationary forces all over the world because there is too much debt. It's a problem to service it. So that deflation, they're going to fight it with gold. But what does that do to the West? It destroys the West. It destroys the West because it destroys their currencies. You're going to see a hyperinflation in the West, and this goes back to what I've said all along, is that we would see both inflation and deflation at the same time. Inflation of the things you need to live on, and deflation of the things you already own.
And as you've also mentioned, Bill, over the years, these banking conglomerates are all linked to each other in a daisy chain. We recently saw, we have Powell, we have the FDIC talking about the instability of the banking system here in the United States. This came out of Zero Hedge recently, out of Japan, right? The music just stopped. Japan banking giant Norashukin is to liquidate $63 billion in U.S. Treasuries and European bonds to plug massive unrealized losses due to their derivative positions, actually, based in the United States with commercial real estate. And we recently, just the other day, had a Chinese bank where they weren't opening their doors either. So Bill,
right.
And many people believe, well, okay, so this bank I'm living in Montana. Well, what difference does it make that a bank in Japan? Well, no, they're all linked to the other banks in Japan, who are all linked to the banks around the world, correct?
Yeah, absolutely. If you want to call it a financial orgy, that's what this is. And if you get an infection somewhere, it's going to infect the entire system. And we saw that in 2008 2009 when Lehman went down, derivatives, the total derivatives outstanding are more than $2 quadrillion worth. If you add up every asset on the planet, you're probably about half of that number. So you've got this $2 quadrillion tail wagging a $1 trillion dog. Basically, almost all banks have some forms of derivatives, but if they don't, it doesn't matter because their trading partners have derivatives. And the problem with derivatives, it's a zero-sum game. There's a winner and there's a loser. And if the loser loses so bad that they can't pay up, then the winner's a loser because they don't get paid. And that's the problem.
So, Bill, as you've mentioned also in previous interviews with us, there are no coincidences with any of these developments, if you will, right? So we have Powell talking about, well, we're prepared for banking failures. The head of the FDIC saying the same. We're prepared, although the recent data says, hey, there's no money in the bailout fund. And as you also mentioned, many people are in the delusion that, well, my bank account, my savings account, my checking account is protected for up to $250,000. But as you mentioned, Bill, there's $125 billion in that kitty. And I went to the FDIC website day before yesterday. They're covering $17 trillion of deposits with exactly what you said. You have to dig to find it on their website, but $125 billion. Okay, so they're covering $17,000 billion, which is $17 trillion, with $125 billion. No, that math doesn't work out. So Bill, there are no coincidences, as I mentioned. So we got the Fed, we have the FDIC, we have others saying, oh, well, we're worried about a bank going down, but we're okay. We got it protected. Well, Bill, I don't know. Coincidence? Probably not. Just this morning, it came out, Vince Lancy, a big-time commodities trader, came out with this information that behind the curtain in China, what happened this morning was a individual who's called the Hunt brother of China, who's backed by the Chinese government, took a position in physical gold and physical silver, huge position. And the counterparty to that position was a derivative position by JP Morgan Chase. And this individual said, nah, you know what? I'm taking delivery. Bring it on over. Which everybody's looking at the consumer numbers, the inflation numbers, saying, "Oh, well, they showed that inflation is going down." Really? Go to the grocery store. But anyway, so that means that gold's going up and silver's going up a lot, and that's the reason why. Well, Bill, no coincidences. We have, as you've always said, Bill, we have a delivery thing going on right now, a delivery issue, and JP Morgan right now is on the short end. So it's interesting that they're talking about a big bank going down, and they're having to cough up their derivative. Am I off on putting these breadcrumbs together?
No, you're spot on. Let me just go back to, you were talking about the FDIC with $125 billion, the bailout fund with no money. And supporting all of that is an insolvent Federal Reserve. They lost $165 billion last year on their mark-to-market. Their equity, the last I saw, was $65 billion prior to that. So they're sitting on a black hole that holds up the entire Western financial system. The central bank itself is insolvent. Now, as far as the failure to deliver, I've talked about this for close to 10 years now.
Yes, you have.
That ultimately, at the very, very end, there would be a failure to deliver. And this kind of goes back to what Jim Sinclair used to talk about. He would ask the question, what is the value of a contract that cannot perform? Well, the answer is zero. And it's conceivable that you could see gold at 10,000, 20,000, pick a number, yet COMEX is at $10 offered, no bid, because those contracts are worthless. If they can't deliver the metal, then what's the purpose of ever buying that contract? And those contracts over the past 20, 30 years, that's what they've used to actually price gold and silver, to suppress the pricing. And it's surprising. I do want to mention this just one more time because a lot of people don't really understand. There is definitely an incentive for Treasury and the Fed to suppress the price of gold because gold is kryptonite, if you will, to the dollar. So every time they smash gold, they point at the price and they say, see, gold bad, dollar good. And of course, that's why they really have to keep silver in the box, because if silver takes off, then gold will follow. And that basically destroys the Western currencies that are all backed and based on the US dollar.
Well, and Bill, at the end of June, you put something up on your website, and you did this earlier this year, and you nailed it. You said, look out, here we go. It's going to move. They're both going to move higher, gold and silver, significant. Well, you did that again at the end of June. You put it up on your, I mean, you're very transparent about stuff. So Bill, what did you see that nobody else was seeing at the time that now we're experiencing this significant move?
Yeah, and to be transparent, I mean, I've seen it in the past, and I've talked about what I was looking at. If you go to June 29th on my website, I put a chart of silver up, and I asked the question. I said, is silver bouncing exactly where it should at $29? $29 was the previous high chop area between 28 and 29. And also the 50-day moving average was at 29. On top of that, if you look at the bottom right-hand corner of the chart, you have the moving average convergence divergence was getting ready to cross over to the upside. It was forming a hook. That hook has formed. It has crossed over. We're going higher, and I don't have any doubt that we'll have new highs in gold. We may have new highs in gold by close of business tomorrow, and we may be over the 32.50 on silver by the close of business tomorrow. In the past, I had talked about this, but all of a sudden we would get $1, $2 straight down in silver,
right.
$40, $50, $70 down in gold.
Right.
And that was done with COMEX contracts. What this is showing me, what it's telling me, is that the cabal, the big traders that have been trying to suppress the price of gold and silver all these years, they're losing control. And if it turns out that Vince is correct about the Hunt brother, the whale in China, demanding delivery, our world in a week or 2 weeks could be unrecognizable because a failure to deliver blows up. A failure to deliver in silver blows up gold. And once gold blows up, every credit instrument, every credit derivative on the planet blows up. So, I mean, we will get to the point once the derivatives blow where everything paper is worth nothing.
You know, Bill, a couple times in this interview, we mentioned the Hunt brothers. Now, there might be some people, the Hunt brothers were big in the 80s, are saying, who are these Hunt brothers? What are these guys talking about, Hunt brothers? You know, Bill, and I did not mention in your introduction, someone who you were a partner with and good friends with for many years, Jim Sinclair, who was a legend in the field, who was known as Mr. Gold, and he recently passed away, and that moniker has been passed on to you, Mr. Gold. I would actually say Mr. Gold, Mr. Silver, but okay. So Bill, for those not familiar with the Hunt brothers, and I bring up Jim because I didn't know this until you told me this today, that actually Jim was integrally involved in unwinding the Hunt brothers' position in silver when the government, if you will, kind of came in. I don't know, you give us the brief history if you could, Bill, but kind of came around and said, bad boys.
Right.
Educate us about the Hunt brothers.
Yeah, well, first off, Jim was the guy who spearheaded the move in gold up to $875 an ounce. He actually took an ad out in the Wall Street Journal when it was $200 and said that gold would balance our books. He had the biggest position in gold futures in all of history. He sold it all in one day. Gold was down $75 that day and never regained the pricing until, I'm thinking it was 2007, 2008, we got to 850. The Hunt brothers, they were hard money guys. They saw that the deficits were starting to explode. They knew that the London gold pool had blown up, and they targeted silver. The story that Jim told me was that if the Hunt brothers had done it with all cash, it would have taken longer, but the system would have blown up and the Hunts would have won. But they got greedy, and what they did was they started buying futures, options. They borrowed money, in other words. They were doing it on leverage. And had the government not stepped in and changed the rules, what they did in 1980, when silver was virtually $50, they stepped in and they said, you cannot enter a buy order on COMEX. You can only sell. And within, 2 or 3 years, silver was under $10 and didn't get $10 again for many years. Paul Volcker, back in 1980 or 1981, actually hired Jim to unwind their position. And it may not sound like big numbers now, but the position unwind was somewhere in the $5 to $10 billion range, which today is a complete ham sandwich. But even as late as 85 or 86, Texaco was taken over for $13 billion, and that was the biggest buyout in the history of history. I mean, that was absolutely humongous money, which, like I said, today, $5 or $10 billion, you got people that can write a check for that now. But that's what the unwind was, and it took 3 years to do. It was a very intricate process to unwind.
So, Bill, here, interesting point here. You mentioned that at one point the government stepped in. The government stepped in. One more time. The government stepped in. This is 1980, and said,
right,
boys, nobody, not just you, Hunt, nobody can put a buy order in. You can only put a sell order in. And people will say, wait a minute. That's beyond disruptive to fair market pricing. That actually seems illegal. Bill, what's new? What? This is the government. Why? Right? So people look at the government today and say, man, I can't believe they're doing this or that. Bill, go back to 1980, just this one instance, right?
Yeah, this was a matter of national security because if silver had blown through $50, let's say it got to $100, $200, gold would have exploded. It would have gone right through $875 like a knife through butter. We would have had $2,000-$3,000 gold. They did the movie Rollover in 1980.
Yes.
About the Saudis not rolling over their debt. And somebody made the comment, and this was when gold was $500-$600. Somebody made the comment, gold's going to be $2,000 tomorrow. And the comment was, no, $2,000 tomorrow will be cheap. It would have blown the entire system. The whole Western financial system would have had to have been rebuilt, redone, reworked. And it would have been a good thing because that was the beginning of the debt buildup.
And as you mentioned earlier, Bill, precious metals are kryptonite to the dollar. So if they would have blown in 1980, the dollar, and we were already in because we had the whole Carter thing with, the stagflation, the dollar would have imploded right then and there. And ever since then, for the past 44 years, it's all been a bunch of duct tape and patchwork to keep a system floating that is essentially the financial Titanic.
Yeah. I have not written the article yet. I'm not sure if I'm going to write it, but I did last night put a title down. We have been gaslit.
Yeah.
And if you think about it, what's happening now is with what's going on with Biden. I mean, anybody with their own eyes can see it. It's not a deep fake. The guy's got dementia. The country's not being run by the president. And that leads to the question, who's running the country? But the point being, I mean, here's a guy who did not even, he didn't even campaign.
No.
He got more votes than any presidential candidate ever. The point I'm trying to make is that gaslighting episode is unwinding right before your eyes. Mm-hmm. I mean, the average person has got to be kind of pissed off thinking, hey, you know, they bullshitted me all these years. They've gaslit me. And the reason I'm bringing this up is the entire financial system is a gaslight. And think about this, Dave. If the Dow, instead of being 38,000, 39,000, whatever it is, let's say it was 20,000 or 15 or 10, or the NASDAQ, the S&P, if stock markets, the fact that people can look at their statements online or open them from the mailbox or whatever and see, okay, I've got X amount of dollars, I'm doing good. So I don't really care what's going on because I'm taken care of. The people don't understand that you could wake up tomorrow morning and all of a sudden, poof, markets are closed. Mm-hmm. And we've gone through the great taking before. Mm-hmm. The great taking is where these derivatives blow up Bank A and insurance company B and broker C, and those assets are going to be taken. Then where are we? We have a completely unproductive real economy, and we have a financial system or financial economy, whatever you want to call it, where they've basically gaslit the people by making them feel wealthy.
So, Bill, as I mentioned in your introduction, you're one of the top, if not the top, precious metals analyst in the world. So tell me where we are right now as it relates to precious metals in the retail market, as far as supply and demand. And where do you, and demand in particular, there's two types of demand: the industrial demand, the big boys, and the Joe and Jane public. Where are we on the supply and then those two aspects of the demand?
Yeah, supply actually is really good right now. We're not back ordered on anything. If we were doing this interview a year ago, the supply was really difficult to get Silver Eagles. After the banks failed in March and April of 2023, we went 6 to 8 weeks where we were taking orders on coin that was on its way in that we knew we were going to have, but we didn't have it and wouldn't have it for 6 weeks or 8 weeks, so it took that long to ship. There are no disruptions at all right now. Supply is good. And I'm going to say the demand in North America is definitely slower than what it had been a year ago, 2 years ago. And I really don't know why. I think it's like a deer in the headlight type of thing. And actually, well, maybe I do know why. We've actually gotten more sell orders this year than ever. And I think that's a function of people, losing jobs, the real economy not providing for them, and people are needing to raise cash. So we are seeing sell orders. Now, that said, the North American market is not what drives price. Mm-hmm. What's driving price right now are central banks. And the appetite for gold and for silver from central banks is unprecedented at this point. I mean, if you look at what India imported just the last 3 months of silver, I mean, that's it's like half of total global production, and that's just in 3 months. Mm. So you have central banks, you have foreign sovereign treasuries that are buying gold, they're buying silver, and of course they're doing this because they know where the BRICS are leading us. They're leading us to basically a lights out scenario for the dollar. And they're doing that so that their balance sheets have something on the balance sheet that will expand when the dollar portion implodes.
And in line with that, Bill, there was a recent report out. Hardship withdrawals from 401k plans this year have rocketed nearly 40% as savers fight to save their homes. The retail demand, as you mentioned, Bill, amongst Joe and Jane public, well, it's not as great as one would think because people are too busy trying to save the places they live in.
Right. Yeah, it's not. Well, housing is lagging commercial real estate. It's absolutely clear that commercial real estate is a train wreck, and there's kind of a sell by date, if you will, and that's the end of this year. There's over $1 trillion of commercial real estate debt that needs to be rolled over between now and the end of the year. Mm-hmm. That's not going to get done. No. It's not going to get done because these office buildings, hotels, whatever, they have high vacancy rates. So even based on 0% interest, they wouldn't be able to roll over. At 5% interest, there's no way. I mean, you're seeing commercial real estate properties change hands through bankruptcy at a loss of 75 as high as 90% over the last, properties that were bought 3, 4, 5 years ago. That's how much they've dropped. So the commercial side is an absolute train wreck, and it blows up before the end of the year. The housing market, we're still in the very early stages, but now all of a sudden there's a lot of supply. Mm-hmm. A lot of people are looking, to get out. And not only is there a lot of supply, but interest rates have risen so that a new buyer who a year ago earned enough to borrow $1 million can only borrow $500,000 or $600,000. And then lastly, the volume of closings so far this year, I mean, they're running at a pace of about 50% of where they were. And I will just tell you, in any market, it doesn't matter whether it's housing, stocks, wheat, rice, oil, whatever, any market where what happens is price always follows volume. If volume picks up and is sustained up, you can pretty much guess that the price is going to go higher. And if the volume drops, like you're seeing drastically in housing, prices are going to drop. Prices are going to collapse in the housing market. So you very well may see some people that are trying to pay their debt down that smell this coming, smell it coming.
So, Bill, you've always told us that the cult, the syndicate, the criminal international banking syndicate, always gives us a heads up. They treat us like we're in the shower, and they tend to tell us when they're going to flush the toilet, and they know that 99.9% of the public isn't going to be aware, and you know what? They get what they deserve. But those, the few, the very few that actually still have some analytical ability, well, we'll spare them by giving them a heads up. The IMF, International Monetary Fund, a globalist entity, has said the following of late. The world needs to prepare for the unthinkable. International Monetary Fund Director Kristina Georgieva has warned that the world needs to be prepared to better handle shocks and the unthinkable. They also put out a statement. The International Monetary Fund is warning the risks of a breakdown of the world financial system have risen to levels only seen during past crises. Well, there you go, Bill. There's a couple beauties. So, Bill, this all ties in, doesn't it? The debt crisis, a banking crisis 2.0, 3.0, 4.0, whatever you want to call it, a failure to deliver. This all wraps itself in a very neat package, an unfortunate package. But, Bill, am I wrong by saying the only way people can really protect themselves is by having entities such as gold and silver that do not carry with them counterparty risks, in other words, debt associated with them, and are the ultimate store of value? Is that an oversimplification of how people can protect themselves?
Financially, you're correct. I mean, the best way to put it is You want to own gold and silver because they cannot bankrupt, they cannot default. And we live in a world that is bankrupting or defaulting. So you want your assets out of that system, and you want those assets to be something that cannot bankrupt. And that's by definition gold and silver. To your point about the IMF, between the IMF and the World Bank in the last 4 or 5 years, they have issued about 50 warnings. And if you understand the elite believe it to be poor manners, if you will, to foist the surprise on someone. They believe that they have to give a warning. That it's not an in-your-face warning, but they do make a warning for those that are willing to dig into what they're saying to heed the warning. So when everything goes down, they will be able to look back and say, "Hey, we warned you. Mm-hmm. We warned you a lot of times," mm-hmm. and they have done that. But yeah, they understand this is all coming to a head. I mean, the debt crisis is coming to a head, and this year's different. That we actually have a timeline, and I've talked about this before. I've said, I think that there's less than a 50-50 chance that we will have an election mm-hmm. after the debate, and then after Joe's interview with Stephanopoulos, and then after today, which he's doing supposedly a real press conference.
A quote, big boy press conference. I've been dealing with DC since 1988, right? I've never heard a press conference termed to be a big boy press conference. God.
Well, my point being, after seeing that, I think the odds now of having an election are somewhere between 25 and 35%. I really believe that they're going to kick the table over. Mm-hmm. Maybe, some false flag, maybe a real event, who knows? But I do not think that the financial system is going to make it to the election. And the reason I don't think that's going to happen is because those in power, if they believe they're no longer going to be in power, they're not going to willingly give up power. They're going to kick the table over and do something where they can say, "Oh, well, but we can't have an election for now. We'll have one next year."
Or they actually might do what many would term to be not an election. Let's say all heck breaks loose, with the fighting forces they brought across every border here in our country. Every state is a border state. And, this would be the varsity team as opposed to the JV team that we saw in 2020. They decide, hey, we're looking out for your best interests, so it's too dangerous to go vote. We'll just vote by mail, knowing full well there's a 20% fraud rate associated with that in published studies. But then, imagine though, Bill, imagine this. Imagine if somehow, in spite of all the phony baloney stuff, let's say Trump wins. But all of a sudden, the financial system conveniently crashes right after it looks like he might win. And they say, we can't hand over power because, well, look what's happened. Since it looked like he might win, the system's come down, which it was always going to come down. And, well, you can't have him installed. I mean, you could just kind of see that playing out a little bit.
Yeah, I see what you're saying, but I don't really agree with that, because if they did hold an election and he did win and they crashed the markets, and by January 20th, they did not want to install him, that would be basically a license for what they accused the January 6ers of doing. It would give them a license to do that and then some exponentially. It would give a license for a civil war. And I don't think that's really what they want. I really think they'll kick the table over prior to the event if they truly believe that they can't cheat enough to win.
Well, either way, folks need to protect themselves. And I thank you, Bill, for everything you've done over decades, a number of decades' time, in preparing people for what's coming down the road. and how they can best protect themselves. Bill, educate our listeners on how they can follow you 24/7, because it is must do, because you do, as we mentioned during this interview, you put information on your website that puts people ahead of the curve. So educate our listeners on how they can follow you and how they can get in touch with you.
Yeah, you can go to my website. It's just billholter.com. If you want to contact me, there is a contact button there. I normally put up 2, 3, 4 articles per day and put comments to those. And I would urge you to subscribe. I mean, I don't really care how many subscribers I have, but if you subscribe, you get in your mailbox every day what the articles are. Mm-hmm. So, if you forget a day to go to the website, you're going to get it in your mailbox. So you'll get everything that's being put out. And if you do want to contact me directly, like I said, you can go through the website, or you can go directly to my email, bholter@proton.me.
I thank you very much, Bill, for all that you have done, are doing, and will do. I thank you, folks, for joining us. Now, you need to network this segment we just did to all those you know and love. Because I can assure you, 99% of those that are in your family, that you work with, that you are neighbors with, have absolutely no clue of what we just spoke about. Help them, educate them, and empower them. Until next time, Dave Janda signing off. Dream big and dare to fail. Thanks for your time today.